Hey everyone, Brian Bogner and Greg Towner here with Parallel Portfolios. We are bringing you our 5-minute update on the economy and markets for the month of May here in 2019. So let's go ahead and get started. Greg, how are the U.S. stock price trends after this recent correction that we have been experiencing?
Yeah, as recently as a couple of weeks ago, we were hitting new all-time highs, and then all it took was a couple of tweets on tariffs, and the trade war was off and running. Market came back, sharply. Really held within the longer-term trends so far. We didn't get all of the deep oversold metrics that we'd like to see to have high conviction that a low has been put in, but certainly the market has started to rally off of that. So far, trends have held up well. That last chart was a 3-year. If we zoom out to this one here, this is a 10-year chart, Brian. This is really more important to look at all the little gyrations over time. I mean, like the little blip that we just had is barely even recognizable on a long-term chart like this one. In fact, on the next page here, we can see that there's been 17 corrections of 5% or more since the market bottomed back in 2009. So 17 times we've had corrections that averaged around 10%. They never felt good at the time. There was some kind of noisy headline that scared you. No one enjoys it, but it's just that's a fact of investing. And so this last little pullback we had, could it get worse? Of course, but there's always going to be pullbacks, and they're always going to be associated with some kind of scary type headline. Speaking of pullbacks, I know the next subject is one that you wanted to go into with interest rates.
Yeah, interest rates. It's interesting that interest rates have been low, and when you talk to people, what you hear a lot is, oh, interest rates have to go higher, they got to go up, they got to go up. And this right here was the election, right? So interest rates shot up, and actually then spent most of almost the next year just kind of going flat. And then in 18 last year, we saw them move a little higher, but we have seen interest rates drop dramatically. And so even though during this time frame the Fed was also lowering the short-term rate, this is a 10-year yield here, we're seeing the 10-year yield actually continue to go down. So it's interesting right now, the Fed's on hold, but long-term rates are declining. That's good obviously for housing, it's good for real estate, it's good for folks who want to borrow money. But that should be interesting to see how it plays out and how it affects the overall economy as well. But right now, the trend is down in interest rates. So we talked about interest rates, we talked about the market. What is in the headlines right now, of course, is the trade war. What are your thoughts on that?
Yeah, there's a lot that can be discussed here, but we'll keep it brief. If we look at a couple of areas that people thought when the tariffs started to be discussed, over a year, almost a year and a half ago now, that might be perhaps benefit from this. This first chart is U.S. Steel Corporation. That purple line shows what the stock has done since around the time those tariffs were being discussed. It has been destroyed. So clearly not benefiting from the tariffs. Another area is agriculture. This is a group of agricultural commodities all grouped into one. Also been hurt really hard for the last year and a half since since the tariffs were enacted. And now we're talking about larger tariffs. And so what we're getting at here is, there's none of us can predict, when this is going to end or if it will end or how it will end. But what we think is that more and more, as the tariffs have gone up, more and more of these areas are going to start to feel some pain potentially. And the president obviously wants to get reelected next year. So these are key areas. If you think about agriculture, all the Midwest, key voting areas for him, U.S. Steel, so forth. He's not going to want this pain inflection to hurt the economy as we go through this year and into next year. So when that means an agreement will happen, is anybody's guess. We think at some point there's going to be enough incentive to get a deal done. And in the meantime, we're probably going to see some volatility as more tweets happen and so forth.
Yeah. Well, it's definitely going to be in the news and talked about, and just interesting to see how it affects everything. So in summary, we're in a correction, but we're still holding the long-term trend. Of course, interest rates are moving down, and I think it's surprising a lot of folks here with that happening. Trade war is certainly a risk, but you're right. Self-preservation tends to rule all, and we hope that will be the incentive to actually get a deal done here sooner than later. So if you have any questions, give us a call, shoot us an email. Thanks for tuning in this month, and have a great day.